One of the themes I've been hearing a lot lately is, it's too late for me to start investing in real estate. People think you need 20 or 30 years to build wealth with real estate. And if you're over 40, like I am, somehow you've missed the boat. Well, I'm here to tell you that not only has that ship not sailed, but you've actually got an advantage. Your age, experience, and financial resources put you in a far better position than most 20-somethings. And today, I'm going to share a simple 5-step plan for building wealth with real estate, and the most powerful strategy to help my fellow 40-somethings secure their financial future. Before we jump in, make sure to like the video and hit that subscribe button. After a successful 20-year career, I decided to leverage the income I spent decades building to buy assets that generated wealth for my family. My real estate journey started just shy of my 40th birthday, investing in single-family homes. And after doing it for several years, I can tell you the income was anything but passive. I spent hours on nights and weekends building and managing my portfolio. As someone who was still working a W-2 job at the time and had a newborn at home, the last thing I wanted to do was take on a second job. So I started looking for other ways to invest in real estate. And that's when I discovered the powerful wealth building strategy that I'm going to share with you today. So let's be honest, you've probably seen this all the time on social media, right? 20-somethings bragging about their massive rental portfolios. They might be exaggerating or straight up fabricating that success, but nevertheless, we see it. And part of you might feel a little bit of regret. Maybe you're thinking, I've missed my opportunity, or if I had only started earlier. Well, I'm here to tell you, stop, that it's not too late. That feeling of being late is a myth. The truth is, starting this journey in your 40s or even 50s is not a disadvantage. It's a strategic advantage. You have something younger investors don't, what I like to call a life resume. You've been around the block and built up real-world knowledge. You probably have more investment experience and financial resources younger generations would love to have. These are the fuel for the strategy we're about to build. It's about using your unique strengths to run a smarter, faster race. You don't need 20 years to build wealth with real estate. You just need the right strategy. So get ready, because we're about to build a simple 5-step plan to create hassle-free wealth with real estate. Step number 1, laying the foundation. All right, let's start by establishing a solid footing. Get this right, and the next few steps are really easy. The first step is having a clear vision for your future. One of Yogi Berra's well-known yogiisms says, if you don't know where you're going, you'll end up somewhere else. Setting your goal and figuring out your strategy is always the first step. Ask yourself, what does financial freedom actually mean to me? What does that look like? Is it replacing your W-2 income? Is it a specific cash flow number to fund your retirement? Is it having more time to spend with your children or to travel? Whatever it is, get specific and write it down. This is the North Star that will guide every investment decision that you make. Second, you need to assess your resources. Think about it like a 3-legged stool. Every real estate investment needs capital, time, and skill. You need to figure out what you bring to the table. Think about your situation and be honest with yourself. Do you want the headaches of acquiring and managing a portfolio yourself? Or you want to just simply invest passively? Start with money. How much do you have saved that you can realistically and responsibly contribute to investing? Then think about time. If you're a busy professional or a successful business owner, do you have the time to do the work yourself? Third, you need to get educated. Do you have the knowledge and the experience to find great investment opportunities or to manage a portfolio? And finally, and most importantly, take action. A goal without action is just a dream. You have to take that first step. Step number 2, getting out of debt. You can't invest in real estate or anything else for that matter if you're buried in debt. Did you know that 62% of high-income earners, or people earning over $300,000, struggle to pay their credit card debt? You'd think that making 6 figures means you're financially set, right? Think again. The majority of high-income earners are living paycheck to paycheck. As incomes rise, so do expenses. Bigger homes, nicer cars, luxury vacations. Factor in inflation and higher taxes, and suddenly that big paycheck doesn't feel so big. Lifestyle creep, larger financial obligations, and easy access to credit make it difficult for even well-off individuals to stay out of debt. And that means money that could be invested in your family's future instead is going towards servicing debt, which delays wealth building opportunities. One thing you can do about that is to consolidate your debt. Combine multiple high-interest debts like credit card balances, personal loans, or lines of credit into one loan with a lower interest rate and a fixed payment schedule. It means fewer monthly payments to manage, reduced financial strain, and increased monthly cash flow. Consolidating debt allows you to redirect those freed up funds towards long-term goals like retirement, wealth building, or future planning. Step number 3, finding the right strategy. All right, you've done it. You've identified your goals, evaluated your resources, and you've gotten out of debt. Now, how do you achieve those goals? Remember the three-legged stool. If you're an experienced professional or have built a successful business, you likely have capital, but not much time or experience to actively invest in real estate. Leverage that strength. There's lots of different ways to invest in real estate, but one of the most effective for you is something called syndication. It's a strategy that allows investors to pool their resources together to purchase large, profitable real estate that they couldn't buy on their own. Think storage facilities, retail centers, or apartment buildings. Syndication is basically a partnership between two groups of investors, general partners and limited partners. The GPs have the time and the skill, and the LPs have the capital. Unlike residential real estate, buyers of commercial property typically need to come up with 20 to 30% of the down payment. Think about it. On a $5 million property, that's $1.5 million. A general partner will likely have a small percentage of that money, but they'll need to raise the rest of it from private investors. That's where the limited partners come in. They bring equity to the deal for the down payment and upgrades, allowing the GP team to make the purchase. The GPs are the active investors who operate and manage these assets. They implement the business plan and increase the value of the property, while the limited partners simply sit back and share in the returns. The limited partners are 100% passive. Now, I know that might sound almost too good to be true, but syndication is a strategy that's been around since the Securities Act of 1933. It's an established strategy that many high-income earners and high net worth individuals have used for decades to build wealth. And to help you understand how it works, I've put together a free mini masterclass that breaks it all down. The link is in the description below. It is completely free, so make sure you check it out. Step number 4, selecting the right sponsor. Okay, so the next step is to find the right general partner or sponsor. Start by looking for one that operates in a solid market and focuses on an asset class that you understand. Find a sponsor who has an established track record and specializes in that asset class. Ideally, you want a team that's not only purchased property, but has taken it full cycle, meaning they bought it, executed their business plan, and successfully exited the investment. Finally, set up a call to get to know them, how they operate, and ask any questions that you might have. Step number 5, selecting the right investment. All right, now let's talk about investing in the right opportunities. Remember step number 1, where we talked about setting the proper foundation. Your job is to vet all deals through the lens of your investment goals. When a sponsor has an investment opportunity, ask yourself, does this deal bring me closer to my goals? Does it align with my investment objectives? You'd be surprised how easy it is to go off course. Don't get shiny object syndrome. If you're looking for cash flow, but the opportunity doesn't generate distributions until years 2 or 3, it's probably not a good fit, no matter how enticing the opportunity is. On the flip side, if you have a moderate to high risk tolerance and the opportunity is a value-add apartment complex with 18 to 20% annualized returns, you'd likely be interested. Use your goals as an initial filter to screen potential investments. If they align with your objectives, then dig deeper. If the investment is a good fit, then move forward. This is the same simple 5-step process I personally use to help me create financial freedom, and I'm confident it can work for you too. So let's put that myth to bed for good. It's not too late to start investing in real estate if you're over 40. Not only is it possible, but you're in a prime position to succeed. Leverage the stability, the wisdom, and the resources that you've accumulated to build wealth. With syndication, you can get your hard-earned money working hard for you instead of the other way around, all while a team of experienced professionals do all the heavy lifting. This simple 5-step plan may seem novel, but it's a blueprint that's been used by successful investors for almost 100 years. If you're over 40, building wealth with real estate is absolutely achievable. You don't need to have started in your 20s. You just need to start now. The only thing holding you back is the story you're telling yourself. It's time to write a new one. If you're ready to start that 5-step plan, hit the subscribe button so you don't miss the next video. And if you want to learn more about syndication, check out my free mini masterclass in the description below. And before you go, I've got one quick question for you. What is the single biggest thing holding you back from investing in real estate? Let me know in the comments below. I read them all, and I really want to help you get unstuck. Here's to financial freedom, and as always, I'll see you in the next one.